Okay, we are live. Welcome to another episode of Wife Her Live. Tonight, well, this month, our focus is fitness and health. And so we wanted to talk about insurance in that whole bundle. I know we don't always talk about insurance, but we should talk about insurance. And tonight we want to tackle it from the single perspective, from the single with no kids, single with kids, married perspective, all of that. It's going to be a full Q&A. We have our special guest in the house, Alexis Hanna, who is so graciously decided to share with us tonight. So I'm just going to jump in to her bio. Alexis Hanna is a wife, a mom of three, and a doer of all things. Being in financial services for the past 13 years, she has worked in various roles in the banking industry and now, most recently, as an insurance advisor with the country's oldest and largest provider. And that country is the Bahamas, just so everyone knows. Alexis's focus is providing families with the financial security they need to have peace of mind for every stage of life. She is passionate about helping people, specifically women, participate more fully in their own financial life, gain clarity around their big picture goals, create a plan to achieve them in confidence, and become financially secure not only for themselves but for the people who depend on them. And that line in particular, who depend on them, which is why we normally go to insurance. So let's jump right in. I don't know if there's anything else about yourself you'd like to highlight. I know there's nothing in here about, oh yeah, it says you are a mom of three. So you have two boys and a
Yeah,
daughter.
I do.
Exactly. And so what is insurance?
Basically, insurance in its simplest form is just a means of protection against the risk of any uncertain loss. So,
Definitely, yeah.
yeah, that's what it is in essence. That is all
Yeah,
that
no,
it
it's a
is.
great definition. The risk of protection against any uncertain loss. And there are multiple different types of insurances, car
Right,
insurance, etc., boat insurance, whatever. But we wanted to talk tonight about health and life insurance. So let's start with
right.
health. And again, for anybody watching, you can drop comments in the chat. If you have any question, you can drop your comment in the chat and we'll answer it live. Okay, so health. What is health insurance?
Well, health insurance, just like we talked about with insurance just being a means to cover any sort of risk of loss, it's the same thing, but it is specifically a coverage that would cover either whole or part of the risk of a person incurring any sort of medical expenses.
Okay. And is that different from if you have to come off work because you're unwell? Or is that still health insurance?
Sorry?
Is that different?
No,
Yeah, that's the
it
same.
is. It is different.
Okay.
So if you have to come off of work, I guess that would be some sort of
Disability.
disability, right?
Okay. Yeah.
Right. So that actually, is a part of health insurance,
Mm-hmm.
but they're just different, forms of coverage, even within health insurance. So there's specifically like medical, and then there is, disability, but there's also either hospitalization, like
Mm-hmm.
all of those different specialized areas are different types of coverage. That can all be bundled together with a certain
Yeah.
type of coverage, but
Mm-hmm.
you can also have them separate and apart.
Yeah, because I noticed, well, I only checked the box to say yes, I want insurance, but
Right.
but there in our package we have the health, we have vision, dental included in
Right.
that, and so that's I guess what you're talking about in terms of the package. So what are the benefits of having health insurance? A lot of people are well, hopefully you are blessed to have an employer who allows you to have health coverage, but that is not becoming the norm so much anymore. So what are the
There's
benefits
not.
for people who to have health insurance who may not get it automatically on their job?
Right. So an individual coverage, the benefit of having it, number one, is if there's any reason that you need to go to the doctor,
Yep.
it's going to be covered. You don't have to worry about it. You have people out there who don't have insurance and they don't know what state their health is in because they haven't been to the doctor in so long because they just simply can't afford it, or they
Mm-hmm.
have to go through the public system in order to get the care that they need, and it's going to be slower and not necessarily as specialized, exactly for that person.
Yeah.
So that's definitely one of the benefits. You're able to go, you get your annual checkups, and you do all of these different things, and just make sure everything is in order and running perfectly. And you can't necessarily do that out of pocket, basically,
No.
all the
Yeah.
time.
And you don't want to have to set up a GoFundMe for the the incidentals of life. Some
Right.
things it's a good to make sure that you are prepared. And I know my in-laws, my father-in-law had a very good coverage, and he's able to now have so many medical procedures covered
Right.
because of that. If not, that would have probably put all of us in a hole, having to pay for these really expensive procedures.
It
So
certainly does.
exactly. And so, even with my dad, I tell him, like, you got to do some prep work, because the
Yeah.
burden will fall on your three children, and we are trying to get somewhere. And so, not to say I don't care about you, Daddy, I love you, but I want to make sure that he has the best care possible. And so that's one of the benefits of
Right.
insurance. And now let's talk about who needs it. Who needs it? And I pretty much know the answer, but I wanted to ask anyway, who needs it?
Well, realistically, everyone needs
Yeah.
it.
Mm-hmm.
And there's no one who does not need insurance.
Exactly.
So, we all need it for different things and different reasons and different seasons of life, right? So, health insurance, that's going to be anyone. Me, I have three children. Those children need to be covered. There's always something going on where someone has to either run to the emergency room, go to the doctor, all these different vaccinations and whatnot. My daughter went to the doctor today for a well visit. That was covered at 100% because we have insurance. You know what
Yeah.
I mean? So everyone needs to have it. In order for me to go and have these children, I
Oh
need to have
yeah.
the maternity package, which is a
Yeah.
part of your health insurance. So everyone needs to have it. If there's anyone who, and that's everyone because we're human and we have to go to the doctor, we're going to run into some sort of medical expense at some point, whether it be big or small, minor or major, you're going to need the coverage. So everyone needs it.
Yeah, and it always feels good, even if it's like $100 procedure or it's an inexpensive doctor visit. It always feels good to see 100% covered. You owe nothing,
Yep.
and so that's the beauty of having insurance. And so, why shouldn't you wait? Why shouldn't you wait to get insurance? Why should you like do it as soon as possible?
You do it as soon as possible because you don't know what's going to happen tomorrow. You could walk out the door right now. Something
Exactly.
could happen. You can get in an accident. You can go and have a heart attack. Anything could happen. You may think that you're in the best shape of your life, but it's not just your health, it's accidents and all of these different things that could occur. And, number one, let's say you have that accident, you recover from that accident, and then you say, oh, you know what? I need to go and get some insurance. That may now be considered a pre-existing condition and you may not be able
Wow.
to qualify anymore for the
Hmm.
coverage.
Or
So
could you
that
not qualify at all, or would it be more expensive to
there
get
are there are
coverage?
a couple of different things. It could be what we call postponed, where we say, okay, you know what? Right now we are not going to take on the risk. That doesn't mean that we're not going to take you on in the future, but let's wait a while and see if your situation changes and then revisit it in 6 months, 12 months, whatever. It also could be rated where we say, okay, yes, this is a higher risk, but we're willing to take it at a higher rate, meaning that your
Mm,
premium, which is the money that you're going to pay on a monthly basis for your policy, is going to be a little higher.
it's
And
gonna
so
be a yeah.
right. So if you're willing to accept that higher rating, then of course, no problem, we'll be able to give you that coverage. And then it also could just be flat out declined. We could say, we're
Mhm.
sorry, we're not willing to accept that risk.
So, what about weight? I know that sometimes people decline health insurance due to weight. The logic
Right.
behind that again is the more weight you have, the higher your risk of stroke and health issues, etc.
Right, that's precisely it.
Yeah.
And it's not necessarily just the weight. We look at a couple different things. It's going to be the weight, but it's also going to be your build. So if you weigh 200 pounds, but like you're 6 foot tall,
Oh
then
yeah.
hey, yeah, that's fine. We look at the build. So it's the
Mhm.
combination of the height and weight that is really what the issue is. If you're petite and then you weigh that amount, then of course we're going to look at that a little differently.
So
And then
you
we're
would
going to
say to
look
that
at,
person, oh sorry, you would say to that person,
yeah.
lose some weight and then reapply. Yeah.
Right. So that's definitely an option. We're not going to flat out decline you because of that. We also look at your family history as well, your medical history. If there are some pre-existing conditions and then you still have the weight as a challenge as well,
Mhm.
then that may be another added component to why you don't get covered. But there are so many different variables as to why you could get coverage and why you would not.
Mm-hmm. So if I fell down, say I injured my ankle and I don't have insurance, but I go and I apply for insurance and they don't know that I injured my ankle. Do I lose my insurance? Or if when you do find, of course you're gonna find out if with the
Mhm.
medical records, but what happens there?
So, what do you mean? If you actually get the coverage, but you didn't
I
disclose that?
exactly.
Okay, so if there is something else that arises because of that, so let's say now, because you had that accident and then your ankle never properly healed, and then now you may need to go and have physical therapy or something for that, right?
Mhm.
That will be looked at as a pre existing condition. Where
Mhm.
you just coming from with this injury now out of the blue, you know what I
Yeah.
mean? That's a
Mhm.
pre-existing condition, and they, would say, "I'm sorry, but we may not be able to cover you for physical therapy for that particular issue."
Injury. Okay.
Right?
Okay. So what about some tips for people who are applying or seeking to apply for health insurance in particular?
So definitely, you want to just take some time and focus on getting your health in order, right?
Mhm.
So you want to be in your best and most optimal shape at the time. So, number one, if you're a smoker, stop.
Yeah.
Like, if you know that you're going to get health insurance and you are a smoker, chances are it could be declined. So, if you're in a space where you feel like, okay, now is the time to quit, please actively try and do so now to work towards having that coverage in the future. In addition to that, working out, exercising, not necessarily a vigorous workout, but, some sort of exercise, 20 minutes a day, just something, some sort of cardio to be able to make sure that that heart is in order, definitely.
Mhm.
'Cause that
Mhm.
would definitely be a big risk factor to getting health insurance. Um, Making sure that everything is in order along those lines. You can go and do your annual checkups if you're able to, out of pocket beforehand, just to make sure that everything is in order. So those are some of the things that you can do.
So before we move on to life, any other things that we need to highlight in terms of health insurance, getting it? I mean, you mentioned children. So when I get my coverage, I need to make sure my dependents are covered as well, and that it
Right,
would be a package available. What
right.
about? I know this may be a difficult question, but where does health insurance start at? I'm fit. I'm 20 years old. I have no pre-existing conditions. Where does it start at monthly? Like a
In terms
guesstimate.
of the range,
Yeah.
you can look at something realistically for, well, at my company, we have it in different tiers of coverage,
Mhm.
right? So you can go from the highest to the lowest. The highest would be maybe about 340 something dollars a month.
Mhm.
That would be like for a healthy woman under 40.
Mhm.
And it could go down to about $100, maybe up to about $120 for the lowest tier of coverage.
Yeah. Okay, cool. So that is good to know for those who don't have insurance and you're watching this. This is your sign. This is your sign. Go
The
and
time is
get
now.
health insurance. The time is certainly now. Moving on to life. And I know this is going to be a deeper topic because there's more, I mean, not more at stake. There's nothing more at stake than you, the person.
No, but
But this one gets a lot more of the focus, I find. We
right.
kind of take the health insurance for granted. And I think there's because there are life events that require life insurance or some form of life insurance.
Right.
But let's jump right in. So, what is life insurance? Your succinct definition of life insurance.
Right. So we talked about insurance in the simplest form, basically just a means to protect against any sort of uncertain loss, right? The same thing with life insurance, but basically there's a contract between a policyholder and an
Mm-hmm.
insurer. The insurer is going to be some insurance company. And basically, that contract is just saying that the insurer is promising to pay a designated beneficiary
Mm-hmm.
at the time of the insured person's death a sum of money in exchange for a premium. So that's
Exactly.
basically
So the
what it is.
premium is what you pay monthly, or in my case, I pay
Right,
mine annually.
right.
And you have a certain face value of insurance coverage that would dictate
Yes,
how much you pay. And then you can set your beneficiaries, the people who would get that face value when you
yes,
pass away. Okay,
right.
so what are the benefits at a high level of having life insurance?
Right. So basically, having life insurance, number one, who needs it? So anyone who has any debt,
Mm-hmm.
you definitely need to have some sort of life insurance. You don't want to, leave anyone in a lurch. Anyone who may be dependent on you or the income that you bring in, you want to make sure that while they are already suffering an emotional hardship, you don't want to have them in the middle of a financial one as well.
Mm-hmm.
So you definitely want to be able to cover your debts, at least that, right? So I already said if there are people who depend on you, you definitely need to be able to take care of them. So if you have dependents like children, older parents who maybe also depend on your income, or if you're their caregiver, you should be able to get yourself covered to make sure that at the end of the day, whoever's going to step in and take care of them is not burdened with having to pay for them as well.
Mm-hmm.
You also need insurance if you own a business.
Yeah. Okay.
So if you're a business owner, if you have a partnership, and if one of those partners died, that's called key person insurance, but still life insurance. You definitely would need to have some sort of insurance because your business partner would be suffering a loss if you were
Mm-hmm.
to pass,
Yeah.
or your business, whoever's going to be taking over that business. However, that's going to be divested. It should be taken care of with life insurance.
Mm-hmm.
So what else? Let's see. To make sure that you cover your final expenses,
Mm-hmm.
basically. So any sort
Yeah.
of burial expenses, whatever that may be. And I don't know if what the average cost of a funeral is nowadays. People
No,
always
I
say, "Oh
don't.
yeah, just throw me in a pine box and bury me." No, it's not that, right? We want to have the best casket. We want to have the repast afterwards. People want to have limos and doves flying around. All kinds of stuff is what
Mm-hmm.
people like to do nowadays. So it could range from anywhere from about 10,000 to about 25,000,
Oh wow. Wow.
right?
Yeah.
So
So at
yeah,
a minimum, you need your life insurance policy to be up to 25,000 to cover your final expenses so that you don't have a burden on your family. You
at the
know,
very
at a
minimum.
very minimum. Yeah,
At the
exactly.
very minimum.
So that's
Um,
singles. That's like singles. You have no kids. You have no parents.
right,
It doesn't matter. Like that is your basic. Obviously, you talked about if you had dependents, younger or older, you would
right,
want insurance because they would be relying on your income. So therefore, you're thinking, okay, how much do they need?
right,
And then obviously, if you have a surviving spouse, making sure they're okay. All
right.
of those different things, making sure
Yeah,
that people are able to go on without having to worry about this financial burden that is left
right,
with in your absence.
right. And if you're single, I mean, you may be single, not married, but you may still be a single parent. You
Oh
may
yeah.
still, like you said, have to deal with being a caregiver to those parents. So a general rule of thumb, realistically, is for insurance for anyone is to be able to have 10 times your annual salary.
Oh
That's a
wow.
general rule of thumb.
10 times your annual salary.
Right.
Wow. So I am definitely underinsured.
Underinsured, right? Well, the thing is, when was the last time you've assessed it? Those are some things that you need to take into consideration. Some people may have gotten it, years ago, and their situations have changed. They were single then, now they're married, they're starting a family, they want to, take out a mortgage, all these different things, and they have not even looked at where their life insurance is now.
Let alone updating your beneficiary. So I mean, my husband and I
Exactly.
talked about that last night, where we were engaged at the time, and he found out that one of his exes was a beneficiary on an insurance policy.
Okay.
And so that was a big surprise that we thankfully remediated. But it was
Right.
really funny in the moment, and now looking back as well. But that's why
Right.
it's so important to take a look at those details. Like for my, I think
Right.
my sister's name was spelled wrong on one of my policies, and so amending that, before something happens to me, so she doesn't have that hassle of not
Mhm.
being able to get the money is so important. So all of those things, I would say, don't just pay your premiums monthly or annually, but also like go in and talk to your agent, look at your
Right.
documentation, and see, like you said, if you're underinsured or overinsured. Now, a
Right.
tip that I personally found beneficial was I don't like monthly payments. I just
Mhm.
don't like it. And so I decided that I wanted to pay my insurance annually. And I think I save up to 1 month's worth
You
of
certainly do.
payments. Yeah, doing it annually. So and if you
You
if you
do.
can if you can afford that, depending on what your Premium is you can talk to your agent about doing it annually. And I even convinced my husband to do the same thing,
Yeah,
and he realized the cost savings. So that's definitely a good tip. Now, if
yeah.
I'm underinsured and I need to have that conversation, um, what kind of questions should I ask?
So basically, what we ask would be, and so what we do realistically is when I sit down with a client, we do something called a financial needs analysis, where we, take some time to review where you are now. We look at your personal goals, your financial goals. We look at things that are priority for you at this current moment, and we look at your monthly expenses to kind of see what's happening on a monthly basis,
Mm-hmm.
to see, number one, those goals that you said you had, how we can kind of close any gaps to achieve those goals. Then
Mm-hmm.
we look at your assets, your liabilities, what you owe and what you own.
Mm-hmm.
And then we look at your insurable need. So your insurable need comes from, number one, from some of those goals that you would have stipulated with us. And then it comes from some of the other questions that we ask, which would be, okay, if you, God forbid, had died last week, right? We want to look at what your immediate cash needs are, which means, what are some of the things that would be outstanding that need to be taken care of immediately? So that
Mm-hmm.
would be number one, your final expenses. So
Mm-hmm.
we already said what the range is for that. And that's where people kind of say, oh, well, child, I only want to pay 3,000. Okay, you might want to pay 3,000. But I mean, the obituaries alone might cost that amount.
Oh
So
wow, yeah.
yeah, realistically, we try to give them some realistic figures in there, right?
Mm-hmm.
Then we look at debt repayment. So if you have loans, credit cards, all those different things that need to be repaid, we look at that as well. So that's a figure that goes into figuring out that insurable need as well. Mortgage, we can't do that separately, but that's also a figure that needs to go in there. So if you just took out a mortgage 2 years ago, that's nowhere near to being done. So that's going to be a big chunk of what your insurable need is.
And you even need life insurance to get a mortgage.
Yes, with
The
most
banks,
money,
yeah, exactly. It's a
you
requirement, and
definitely
so
need to have
yeah,
that.
yeah.
Yeah. So, and that's basically them, looking out for themselves, and it definitely looks out for you as well. It
Yep.
safeguards your family. So let's say if my husband were to pass right now, we still have a mortgage outstanding. God forbid that happens, but we would be able to pay that out with no problem. So that, yes, I'm experiencing an emotional hardship, but at least the mortgage is taken care of. At least certain
Definitely.
things are taken care of.
Mm-hmm.
So yeah, that's one of the reasons why I have no issue with, the bank wanting to hold on to an insurance policy, right?
Mm-hmm.
What else do we ask? We also find out about a trust fund. So if you have children, we ask things like, okay, what amount of money needs to be left behind for them at the
Mm-hmm.
end of the day?
Mm-hmm.
So, and the the cost to raise a child in the US now, on average, is about $14,000 a year.
Wow, Ian, you heard that?
$14,000 a year.
$14,000 a year to
Right.
raise a
Now,
child.
mind you, that would have been about 3 years ago the last time I checked, right? So things may have changed again. And, we don't really have those stats here in the Bahamas. I'm sure it's more just because the cost of living is more here.
Oh yeah.
So think about that. Think about that times one child to
Mm-hmm.
raise them from the age of 0 to 18,
Crazy. Wow.
right? And then the cost of college, that's roughly on average about
Gonna cause
$41,000
someone to
a year.
faint.
When we get to that section is when everyone is be falling out like, oh Jesus, I really didn't even
Yeah.
consider any of these things,
Oh yeah.
right? But yeah, these are the questions that we ask. So in
So
terms of that,
it's really like a mini financial, not even a mini, because most financial coaching sessions don't even cover this far into
right,
your life. So it's a full, I mean, like that's even a bonus. That's
right,
probably saving you $250 just to get
it
a financial
definitely
coaching
does.
session.
It
So
does.
that sounds really awesome.
And
But we didn't,
then
y'all, sorry, go ahead.
no, and then what we do, we don't just leave you with that. From we get that information, we kind of look at what you have in terms of your net worth and where the gap is between what that insurable need is now after we've calculated all of those different figures. And that right there is where we get the amount that you would actually need to be insured for. So, some people may be adequately covered when we look at what their assets are.
Mm-hmm.
Um, However, most people aren't.
So when you say insurable value, would it be okay? Like, say I had 5 times my income in a bank account.
Hmm.
So then there means therefore the downfall would just be the other 5 in insurance.
Yeah,
Okay.
basically. So yeah, the shortfall would be whatever the difference is. Right.
Okay. We didn't talk about the different types of insurance, and I know this is a common question:
Hmm.
term versus whole. So let's dig into that a little bit.
Okay. How do I explain it? The easiest way would be to say term life is like renting, and whole
Mm.
life is like having a mortgage,
Mm-hmm.
right? So term life is exactly what it says. It covers you and for a term. It covers you for a term. So your beneficiary, if you should die before that term ends, then you are fully covered for whatever the face value is or the coverage amount, right? Let's say that term is to age 65. If you get to age 65 and you know you didn't die between then that coverage expires and there's nothing to show for it. We say thank you, ma'am, for your service for all the years of paying this premium, but
Mm-hmm.
there's nothing in return. There's no cash value. There's nothing. You
Mm-hmm.
don't earn anything. So if you move out of an apartment that you've been living in for the last 20 years, you wouldn't have gained any equity or any sort of collateral by living in there for all that time. Meanwhile, if it was a mortgage, you're paying down on whatever that amount is, and at the end of the day, that home is yours. The same
Yeah,
as with
sure.
a whole life policy.
Mm-hmm.
That's yours for life, basically. And
Yeah,
then
and I
it
think
is
even with the
cash
issue when you
values.
have people who have an insurance policy and they forget about it. Oh yeah, I got insurance. And then sometimes it's term insurance. Like we it happens my family with my dad.
Hmm.
So we thinking, okay, daddy, you reached this age. The three of us as children, we're gonna cover the rest of your insurance until you pass away because we're gonna benefit from it. Come
Right.
to find out, the policy is $75,000 between 3 children. And the cost of us paying for that would have been even more than it was probably worth. And he was only going to
Yeah.
get 25. I mean, it sounds like a lot, 25 each, but really he was drastically under
And then
insured
sure.
and had never, checked it out. I was thinking, oh, this maybe a $500,000.
Yeah.
No. And
No.
exactly. And when my grandmother passed away, she had 2 children. I think she would have had a whole life policy.
Hmm.
She was when she passed away, it went to both children, and my dad was able to pay off his mortgage. And
Right.
so that's the benefit of someone who did it the right way versus
Right.
someone who had been underinsured. So that's
Right.
an example to everyone listening that you could be setting up future generations. And a lot of people don't like to think that way. They like to think in the now. I'm only taking care of now. I don't care. I
Hmm.
they could I pay for their school fees. That's all I have to do for them. But if you're really
No.
interested in multi-generational wealth, if you want that, like if you want to be like the Hiltons, who the wealth so trickling so far down, to the kids, they don't even remember who was rich,
Hmm.
and
That's the
so
thing. You want to be 100-year family. And how do you make that happen? The generational wealth definitely comes from insurance. That is one of the simplest ways to start it, basically.
mm-hmm,
And people don't think along those lines. If a husband, takes out an insurance, oh, I ain't leaving that for her to do what? To have some other man laying up in the bed off of
yep,
my money? Like
mm-hmm,
we think like that, which makes no sense. People, the families who are doing it and getting it right, they leave the money. Okay, yeah, I don't have any children, but guess what? This is for the family. I'm going to leave that money indiscriminately. So
mm-hmm.
whoever is going to come in the next generation, I can't think about my grandchildren. I'm going to think about what's going to happen with my niece's grandchildren, just to make
Mm-hmm.
sure that the money keeps flowing.
And what do you
So,
think helps people to think that way? To move from thinking about me and mine to thinking about legacy. What's that mental shift like, or what's it gonna take?
you know what? It starts within the family. So, like, not so much in my family, but my husband's family. This is a conversation that we have all the time. There's a matriarch who does a wonderful job. She likes to have meetings with all of the nieces and nephews and all the
Mm-hmm.
grandchildren to talk to them about, okay, what's the plan? What are we going to be doing? These sorts of things.
Yeah.
To figure out what everyone is doing, how we're going to be able to pool our resources, and it doesn't always have to be money. Whatever the resources is, our intellectual property, whoever has the connections here and there, all of that is what brings the multi-generational wealth.
Wow, that's
So,
awesome.
yeah, having those conversations and just trying to, instill that and ingrain that in your children from a younger age, it helps to move the needle forward for that.
Okay, that is awesome. And I really love that. And I think I will be implementing that if God so graciously blesses me. I mean, I already have nephews, so I definitely think I'm going to implement that as I grow older. Having those discussions with the family. How can we help you pursue
Yeah.
XYZ goal? I love that. That's an awesome takeaway. But what about like insuring my kids? And I think there's an
Mhm.
age limit up to when you can insure your kids, right?
Okay.
Yeah.
So basically, you can insure if you have a kid that's 45 and you want to take out a policy on them, that's
Oh
fine.
wow. Okay.
Basically, anyone who has an insurable interest in you can insure you. So what that
Mm,
means is you can insure your parents if
mm-hmm.
they're able to be covered still, right? You can insure your children, you can insure, maybe your nieces and nephews, but basically it's going to be any sort of family member, business partner, maybe anyone who is going to suffer a loss. Um, in the event that you pass, you're able to insure them.
Awesome.
Now,
And
the
so
difference,
like
the difference is going to be, though, that if you're insuring your children and they are still a minor, then you're the policy owner. But
okay.
anyone who is of age, um, who's legally an adult, then they would have to be the policy owner on their own policy. So you can't just say, "Oh, let me take out this policy on my daddy. He don't know nothing about it or whatever." No, no.
Mm,
He has to be involved in the entire process. Basically, you're just agreeing to pay his premiums.
okay. So then is the cost of that normally expensive when it's your parent?
Well, that the age is a factor.
Mm-hmm.
We talk about why now, why get it now? Because number
Mm-hmm.
one, you're much younger. Number two, you're still in relatively good health.
Mm-hmm.
So that means that the premiums are going to be a little lesser than they would be if you were a bit older. So yeah, most definitely that plays a role in it. But if you have a parent, that doesn't mean that they can't get insured. It may be rated, or like we discussed, or yeah, it may be rated basically, and then the premium is going to be a little higher because of their age. But that doesn't mean that they cannot get insurance. And
Okay.
then it's okay because at that time, depending on whatever age they are, you're not necessarily dependent on them, but you do want to be able to, cover certain things like the burial expenses and anything that you would have to deal with in the event that they pass. So it's
Definitely.
not
I have a
really
friend
about.
who there's like tons of siblings, maybe like 11
Mhm,
siblings. But she has this inkling that she is going to be that one who they look to cover his burial
mhm,
expenses. So she decided to take out an insurance policy on her dad. And
mhm.
in his $25,000, the same number that you
Right,
quoted earlier, in the event that she is the one who has to cover that downfall, and so it wouldn't hinder her lifestyle or her raising her own children as well. So I
right.
thought that was very wise, and
It
definitely
is.
something that people should think about in terms of how to cover for certain things. Now, when we think about our children, let's say under 18, why would I want to insure my child under 18?
Well, basically, at that point, Zemi, I feel like you're purchasing their insurability.
Mm,
So, like, if I were to purchase a policy for my children right now, they are 3, 5, and 7, going to be
mm-hmm,
8. If I get something for them now, well, for two reasons actually. Number one, the first reason that a lot of people think about is the type of insurance policy that we haven't talked about yet, which is going to be some sort of investment vehicle, right?
mm-hmm.
Or a savings vehicle. So that looks like an endowment policy.
Okay.
And you would do that and it endows, meaning that when the policy expires, it endows and you get whatever the face value is, and that will go towards the children. So that
Mm,
is theirs to have. They can use it for college, they can use it for if you want them just to have a head start in life, if they want to start a business, something along those lines. So that endows at age 18, and that definitely is something that we would use as an investment vehicle or a savings vehicle. I like it because it's twofold. It
mm-hmm,
gives you insurance from the age of whatever to 18, and then when that
mm-hmm.
ends, you get the money.
Oh
So,
wow. Yeah.
yeah,
That's good.
there's
So
that. And
would
then,
you Okay, go ahead. Sorry, go ahead.
Sorry, and then I was saying, just to purchase their insurability. So if you're looking to purchase, like I said, my son is 7. If I were to take out a whole life policy for him right now, right? Of course, the premium is going to be so much lower if I took it out for him now than if I were to take it out for him at number one at age 18, or if he becomes an adult and has to do it now himself. And then, of course, like I said, pre-existing conditions, if anything should arise as he becomes an adult, we've already paid for that. That's already taken care of. So he can't be denied because he already has coverage.
Hmm. A lot of companies don't allow that though, right? They don't allow you to take out coverage for like the duration of their life. Can you take? I mean, at your company, you allow parents to take out a whole life policy on children.
Yeah, you definitely
Oh
can.
wow.
Yeah, you can take out a whole life policy on children. You can also do a couple different things. You can have your own life insurance policy and then have them added on.
Mm-hmm.
So it's like a rider or an added benefit to your policy. And how our company does it. The rider is you're able to add on, I think, 3 children under that same one rider for a set amount,
Mm-hmm.
and they're covered until the age of 21. And then at that time or right before it expires, you're able to convert that to a standalone policy for them.
Oh, that's good. That's really
Yeah.
good.
So
Is there
yeah,
a
that's
particular term for that? You said rider, but when that
yeah.
conversion
So it
process.
is a rider. It's just called a child rider, or a child protection benefit is the name of the benefit.
Okay.
So like I said, it would be like your life insurance policy, but then it's an added benefit where you can just add on your children, and it's much less expensive. It's more cost effective doing it that way. That way you're able to get the whole family covered
Mm-hmm.
without a huge cost.
And if I want, like for me, for example, we already talked and I'm underinsured. Do I
Mhm.
adjust my current policy or do I take out a whole new one?
You'll be taking out a new one.
So I leave my existing one
You
as
leave
is.
that one.
Okay.
Leave that one. You never surrender a life insurance policy.
Mm,
So now if you decide that, that one that you have has maybe some sort of cash values because it's a whole life policy and you've had it for a while, but it's not really serving you, and you do want to, let that go, maybe because you need to use those cash values, which is another thing that we didn't talk about yet. You can use those cash values to do things, maybe pay a bill, maybe use them as a down payment towards your mortgage, whatever you'd like to do with
mm-hmm,
them.
mm-hmm,
Um, if you decide that you want to do that, it's always good to put that new policy in force first,
mm-hmm,
because who's to say that you're going to be able to qualify for that new policy and then you go ahead and surrender the old one that you had,
mm-hmm.
right? So it's
Yeah.
best to do that first. And then if you still feel like you need to, then you can go ahead and surrender that one.
Yeah, definitely. Um, you want, okay, so an endowment. Okay, if I'm choosing between whole and endowment,
Hmm.
is that a realistic choice? Whole life versus
So
endowment.
it depends. It depends. Remember, I said the whole life also has cash values.
Mm-hmm.
So some people actually kind of treat that like an endowment as
Mm,
well.
okay.
Yeah, and it's much more cost effective, to be
Which
honest.
one? Whole?
The whole life
Okay.
would be a little less expensive than an endowment.
Okay.
Because the endowment, the whole purpose of it is basically the savings vehicle.
Mm-hmm.
um, with the whole life policy, you will get cash values, but it won't be the exact face value. If you decide to surrender it at an age, let's say, oh, I'm going to keep this policy until age 45. You can decide you want to do that and then surrender it then and just take whatever the cash values are at that time. But it still won't be the same amount. You won't get the face value, basically. So it is a
Okay.
little less expensive to go with a whole life policy, if that is your whole goal behind the policy, to use it like an investment and just surrender it to get the monies.
Mm-hmm.
Um, However, I wouldn't choose between, we talk about all the different stages that you need to get insurance.
Mm-hmm.
And, there's not going to be like one time to get all the coverage that you need. So like you would have gotten whatever coverage that you have now, but okay, now that you and Ian are married, and now that you may be trying to move into having children and whatnot, and thinking about being covered for them, um, you're going to need to have more insurance coverage.
Mm-hmm.
So that's another event at which you want to get more coverage. So the coverage amount that you have now, you hold on to that,
Yeah.
and then you build up by getting more policies to get the full coverage that you need, because you may not be able to get all at the same time. It is expensive to do it that way sometimes. And you may
Mm-hmm.
not be in a position to get all of your coverage at the same time.
Okay, so in terms of the best way to use the concept of insurance or everything an insurance company has to offer, what is that bundle like?
Okay. So, like I said, firstly, we sit down, we do a financial needs analysis. So we could kind of get a scope of your life story and see exactly what all your needs are, right? So you may be single, and then we come back and do a review annually, and that's the best part of it. We do a review. So last year, you may have been single, no children. This year, you come back, now you're married and you have two children. um,
Mm-hmm.
So yeah, so now we assess again and say, okay, your need has changed after we look at the insurable needs again. And that's when we would say, okay, now, so you didn't have medical coverage before. Now you need to add it on because either you're pregnant and you're going to need to have the coverage,
Mm-hmm.
or you're looking to have children because you got married and you're going to need to have that coverage for maternity purposes. Or, now that we're married, we want to look for get a home, so we need to get a
Mm-hmm.
mortgage, all those things. So all of these different events we would revisit with you every time we sit down and do a financial needs analysis. And that's the best way for us to get a full scope of, how much coverage that you need throughout the years.
Mm-hmm.
Yeah. So, but it's not a one shot thing. We look at what your full scope is. You may sit down with us one time and we say, okay, realistically, for your current need, it's going to be about $800,000 worth of coverage. You could look at me and say, I can't do that right now. I have $100. Tell me what you could do with that, right? So I try to get the best bang for your buck at that
Mm-hmm.
time.
Mm-hmm.
Um, and then we revisit it. So let's say you got a promotion or something since then, and okay, now I can look at looking into more coverage, and I really need it because now I have two children. So that's when we revisit and say, okay, now that's why we look at the monthly expenses and see how much you make and everything, to try and make sure that that disposable income is clear enough for us to be able to add more coverage on at each step of the way.
Mm-hmm. And I know I pay annual, but can you do more than annual payments?
Um, you can put it there and just let it sit in your
Mm-hmm.
account. You can also set up a premium deposit account, which
Mm-hmm.
is solely for you to make deposits for your premium.
Okay.
Right? It's also another savings tool. So you can decide to pay either monthly, quarterly, semi-annually, or annually. There's not a mode where you can pay like every 2 years. However, you can put the money on there and set it and forget it if you'd like to do
Mm-hmm.
that.
Yeah, that's good. Um, I think I have reached the end of my questions. I certainly learned a lot in terms of like ways that I probably need to have some conversations going forward as circumstances change. And I definitely, based on that 10 times your income, I definitely am significantly underinsured. So
Yeah.
to have that, yeah, to have that discussion. But thank you so much, Alexis. If they want to get in contact with you, you can actually say your company if you are able to, and where people can reach out to you. If they want to have a discussion with you, have one of those financial analysis discussions, which seem awesome. Not every company does those annually, so that's also a
They
great,
don't.
exactly. That is something that stood out to me as something that is actually very beneficial. You have a coaching session that is pretty much built in to your coverage. So that is awesome. So go ahead and let people know how they can reach you and follow up with you.
Right. So I'm with the A team at Kalina Insurance, and the A team is comprised of myself and my father. So you can reach us at 356-8362 or
Three, say it again. 356.
356-8362 or 467-0372.
You have to say that second one again. 367
467
467
0372.
72. Okay. put that on the screen. That is it. And you said the A team, Michaelino Insurance, and you also have some other things going on. Let's talk a little bit about W3.
Yeah, so the W3 Collective. So since I've started working in this field and doing these financial needs analysis and sitting down doing these coaching sessions with people, I have noticed how intimidating it is for so many people to talk about wealth, to talk about their health, just their
Oh yeah.
wellness in general, all
Mm-hmm.
of these different things. It's hard to disclose information for a lot of us, right? And number one, because a lot of us don't know our numbers, we don't know what's happening on a monthly basis. We don't know. We haven't asked these questions about our goals and different things that we want to achieve. So this kind of spurred me to start the W3 Collective, which means Women, Wellness, and Wealth. And
Mm-hmm.
it's basically just a community. I call it a wellness community for women with a wealth mindset.
Oh, that's
So
good.
yeah, so basically, we create and curate events and experiences for women who just want to be able to have an intimate conversation about their wellness and wealth in general. So we kind of talk about a different topic every month, and we discuss the 8 dimensions of wealth, which is the basis of the community. And basically, we would like to promote the idea that wealth in its truest form is just wellness.
Mm-hmm.
That is the 12th century definition of wealth. It's just wellness.
Mm-hmm.
So once you're doing well in these 8 dimensions of wellness, then money has no choice but to flow to you, basically. So we like the conversation to be intimate and, just close forum so that people can feel it's a safe space to express exactly how they feel about these different areas.
Yeah, that sounds good. Sounds needed, definitely. As everyone wants to be in a position where, like we talked about, they can pass on that financial legacy, and it starts with you and your wellness
Exactly.
and you getting your wealth game together. You get it, making sure you have adequate insurance coverage, and you are on that path to creating a legacy. So again, thank you so much for your time tonight. I truly
Thank you,
appreciate it. I'll put the
Suzanne.
numbers on the screen again. If you would like to contact the A team, you are definitely more than welcome to. So thank you for joining us. I'll see you next time on Wife Her Live. Have a good night, everyone.
Thank you.